In this video, I decided to bring a slightly different analysis based on my price action methodology involving the Andrews Pitchfork plus some other tools. In this case, I'm going to analyze the daily chart from gold, and you'll see some slightly weird applications of the Andrews Pitchfork. In this particular case, I'm going to be studying different ways of predicting the absolute high in the chart, so without further ado, let's begin the analysis. The first thing that catches the eye in this chart is the downward price vector on the left that sort of stops the major flow of buyers. After that downward vector terminated, it is as if the market resets itself. When this sort of thing happens, we can forget about what happened in the past and focus more on what happens from now on. In fact, there's an important lesson in here, which is the fact that what's happening now with price seems to be more important than what happened in the past. If you like to scroll the chart too far back, you will have problems because your lines will not make sense. The market doesn't have that great of a memory, but of course it's not that simple because the trading time is relative to the time frame of analysis. That means that the recent past in the daily chart is the distant past in a 5-minute chart, for example. Beyond the observation of the major vectors created by sellers, there is the need to pay attention to the minor flow embedded in the candlesticks too, which is a little more difficult because it's not so obvious like the major flow. This counterpoint between major and minor flows in the market is of extreme importance if the trader wants to truly grasp what's happening from a contextual point of view. And the contextual framework is paramount if the trader wants to know which lines to draw and in what places. If you attempt to start your analysis with line work only, you will be confused because you will have to choose between an almost infinite number of valid lines. That is obviously going to be very confusing and counterproductive. The way to filter out the bad line work is by using context. Unfortunately, most traders don't like the idea of reading market context because it has some degree of subjectivity, but this kind of thing is unavoidable in this kind of price action analysis. If you are interested in removing the subjectivity from the analysis, you'll be better off with the institutional methods, since they are almost 100% mechanical. On the other hand, they are more difficult to learn from a mathematical standpoint. Back to the gold chart in front of us, we can see that after the disruptive major downward vector, a much larger upward vector started. This larger upward vector is mainly composed by 3 parts that are constituted in the minor flow dimension. We can see this large upward vector as 3 smaller legs in the minor flow. This is another way of thinking about it. We often can use the first 2 legs of the minor flow to predict the third leg, therefore the end of a major price vector. What I really want to show you in this video is that there are many ways to reach the same level, meaning that the Andrews Pitchfork and some other advanced line tools can point to the same price level in different ways. When that happens, we can be more certain about our level of prediction. Let's begin with the obvious thing, which is to draw a standard Andrews Pitchfork using the first 2 legs of the major upward price vector in order to predict the end of the third leg. The thing that becomes self-evident once we draw the pitchfork is that it has a steep angle and price drifts away to the right and escapes the lower boundary of the pitchfork. When that happens, we have a few different choices. The first choice here will be to transform the standard pitchfork into a modified shift pitchfork. The modified shift pitchfork simply brings the A-axis grounding position to the midpoint of the AB segment, and by doing that, it creates a less steep angle in the pitchfork that still respects the geometry provided by the 2 price vectors that generate the pitchfork angle in the first place. When we modify the pitchfork, it becomes clear that the upper line catches the absolute high of the major upward price vector. An extra detail here that increases the precision almost to the absolute maximum degree is to notice that there is a frequency shift in the lower line of the modified shift pitchfork. If we tune the pitchfork to this frequency shift, we'll see how the upper line of the fork will catch the very tip of the highest candle in the chart, which is a fractal bar, by the way. In terms of precision, it cannot get better than this since the line points to the exact tip of that fractal bar on top of the chart. This is one of the ways to see that major reversal point. Let's now go back to the original standard pitchfork grounded on the first 2 legs of the major upward price vector. We are now back to the position where we have a steep pitchfork and prices drifting away from the lower boundary. We can use the same idea of frequency shifting to predict the major reversal point at the top. If we match the lower line of the pitchfork to the most outward point where price drifted away, we'll observe that this movement makes the center line of the pitchfork catch the major price reversal at the top. Notice that this is a different approach than the modified shift we did before, but it still points to the same area where that final fractal bar is. So far, we have two different approaches pointing to the exact same price level, which is the absolute major reversal in the daily chart. Let's go back once again to the starting position using the standard pitchfork in the first two legs of the major upward price vector. Instead of using the frequency shift approach we just did by adjusting the pitchfork to the outward drift, we can employ a different kind of pitchfork called the width pitchfork, which will look a little weird, but is still valid. This pitchfork consists in adjusting the c-axis to the outward drift instead of adjusting the lower parallel line. Notice that once again, the center line of the pitchfork is pointing to the major price reversal. That is a third way of seeing the major reversal. One interesting detail I want you to see here is the BC segment of this pitchfork. Notice how it's working as a sloped support and resistance line. This is a real-time clue that you can use to build confidence in the use of such techniques. Price will interact with meaningful lines before they unveil their predictive power. It's a matter of really paying attention to the details and clues that price gives you along the way. Beyond these three ways that we can apply to see the price reversal, I want to show a fourth way that is unrelated to the Andrews pitchfork. This technique is based on Newtonian physics, more specifically on the third law of motion of action and reaction. The first step is to find some sort of frequency line that cuts through the middle of price action. In this line, we can notice that there are several touches and tests of candlestick tails, and the line also acts as a sloped support and resistance line. Next, since we want to catch the top, we would find a lower price extreme that will be equivalent to the action part of the action and reaction law of motion in physics. The next idea will be to duplicate this space to the upside equidistantly. The reason for that is that Newton's third law of motion states that every action has an equal and opposite reaction, so we need to make sure these two spaces are equidistant. By placing the reaction line, we can see that this line also points to the same absolute high in the chart, and to that same fractal bar upper tail. In other words, we have four different approaches pointing to the exact same price level in this chart, and all of them have tremendous level of precision. It should be clear to you that there is more than what meets the eye when we are dealing with price charts, and also that things become much better when we apply a few basic scientific principles to technical analysis. The reason we strive for this level of precision is simply because precise trades are much safer, since we can dramatically increase the risk-reward ratio with great precision, and you will definitely need that if you want to survive the markets in the long term. That's it for this video. If you want to learn more about price action, technical analysis, and institutional trading, I have made several interesting playlists for you to watch here in this channel. You can check these playlists by clicking the video cards or by checking out the video description. I have a whole series on the secrets of technical analysis, a series on advanced trading with the Pitchfork, and much more. If you want to learn how to trade with professional techniques, please check out the video courses I provide. For beginner to intermediate traders, I offer the Fractal Flow series, which is composed by the Fractal Flow strategy, the Market Maker strategy, and the Newtonian trading strategy. Each one of these will teach you a different approach to trading. Each of these strategies work on their own, but they can be combined together also. They work on any market in any time frame that you wish to trade. For intermediate to advanced traders, I offer the Price Action series, which is composed by heavyweight techniques involving fractal geometry, linear algebra, and very refined contextual market reading to find the most accurate trade entries and exits that are possible to find on a price chart. You can visit my website fractalflowpro.com to see more details about the table of contents of each course and the testimonials from students. If you are more advanced and wish to understand institutional trading techniques that are used by large banks and hedge funds, I also offer 4 different ebooks about hedging and arbitrage in the financial markets. These books are tailored for those who want more objective ways of trading and have a more mathematical mind. These are several strategies built on a few Nobel Prize winning ideas, so they are among the most sophisticated trading strategies available today. If you wish to support the channel, please click the like button, subscribe to the channel, activate the notifications button, share the video, and leave your feedback below in the comment section. Don't forget also to check the other videos in the channel. Thank you very much for watching, and I hope to see you in the next videos. Take care.